Hello, everyone. This is Realtor Linda Peltz. Today I'm here with Mark, and he's going to tell you all about Nexa Mortgage. Take it away, Mark.
Hi, Linda. Thank you for having me on. Yeah, my name is Mark Rocha. I am a mortgage loan officer with Nexa Mortgage. Nexa Mortgage is a broker. We are nationwide. I myself am only licensed in California, but with so many of us loan officers with Nexa across the nation, if somebody happens to be selling here and moving to another state and needing financing, that is something that I can help with. Maybe not firsthand, not personally, but somebody within Nexa. So I really enjoy that part about Nexa. And
I
as a loan
believe
officer,
Nexa has a program, and I don't exactly kind of understand the semantics of it, but it's somehow like if you refer out to another state or whatever, you can still kind of help out with the loan package or something if needed, or kind of stay in touch a little bit better than some of the other mortgage companies.
absolutely, absolutely. So by law, since I'm California licensed, if you're moving to Idaho, I cannot, do too many of the interest rate locks or underwriting conditions and things like that. But I am definitely going to be involved in the transaction still, be the middleman between you and the loan officer that you'll be working with. So I really like that about Nexa. It helps us keep in touch with clients who are leaving the state or coming to the state. So
Very nice. Yeah, I don't think a lot of times the general public understands how our brokerages work and how we're involved with, why do we have to be under a brokerage, So,
right.
and I know lending guidelines and laws are all different than even our real estate. So,
Yeah, yeah, difference between, working at a bank, working at a retail shop, working at a broker. They all have their pros and cons. Similar to what we'll talk about today is different ones, a bank or a broker or a retail shop, they'll all be better or worse for certain people because everybody's personal background is a little bit different when they go to buy a home.
very true, very true. And I'm sure you see all of it. And our biggest thing, at least on the real estate side, is just be truthful. Flat out, just be truthful. I can't help you through a situation if you're not honest with me, and I find it halfway through the transaction. So
Yes, yes, absolutely, absolutely. And I know it's tough too when we're looking at the mindset of buyers, whether they're first time seasoned investors or making their first investment property purchase. A lot of times there's a lot of fear of the unknown. Am I going to be pre-qualified? Are they going to reject me? Are they going to tell me I need 12 months before I can buy? Are they going to tell me I can only afford 300,000? I'm looking at the $400,000 homes. There's so many things that run through the mind of a buyer that that's where those, okay, let's not be 100% honest. Let's not be 100% truthful. But in all reality, once we get all of the documentation we need, we're going to find out one way or the other. So let's just face this news head on, get a game plan set, and if you're looking to buy a home, now the plan is set and you know exactly how to move forward.
because I don't know about your goal, but my goal is to succeed and help these clients, to protect them. In the lending industry, it's a lot the same way, and it's your goal is to accomplish this. So we're not going to sit there in judgment, people. We're going to
Right.
just, okay, what is the issue? Okay, this is the workaround. What's our end goal? Our end goal is to get you into a house. So this is our game plan, like you said. This is our game plan in order to get around that maybe that obstacle of some sort, whatever's in there.
Yeah, yeah, absolutely. And what goes into that game plan, at least on the lending side, we're looking at four different areas for any borrower, whether you're buying an investment property, a commercial property, you're buying your first time home buyer. There's four areas we're looking at. We're looking at your credit score, we're looking at your monthly income, your monthly debts, and your assets you have on hand to close the loan. Those are the four areas we look at. And depending on where all of those are, it's like a jigsaw puzzle. If you move one piece up, credit score down, the entire puzzle shifts. Okay, and that's what it's very, very tough for buyers to wrap their head around because you can have somebody making the same amount of money working in the same place. This happens to me a lot. I do a lot of law enforcement loans, and a lot of them work together. And the way that they're qualified and the way that we structure these loans could be very different between them and their partner because the financial background is different. Those four
Mm-hmm.
items are different amongst everybody, so it just leads to different ways to buying your home. So
And I think if I remember correctly on the lending side, if you have two people applying and they have two different credit scores, I think you go with the lower one, isn't it?
Yeah, that's correct. So anytime we pull a credit score, we're pulling what's called a tri-merge report. We're pulling the three scores from the major bureaus, that's TransUnion, Equifax, and Experian. So if I have two borrowers, I'm getting a total of six scores, three for one, three for the other. We don't give you guys the highest, but we also don't hit you with the lowest. We take the middle one for the both of you. And then of those two, whichever one is lower, that's the one that we underwrite the file with.
Yeah, that's what I was thinking.
Yeah. Yeah. And the reason for that is the bank is lending the money and your credit score is going to give us an indication of how financially responsible you are. And if you have somebody on the loan that does have late payments, does have really high usage rate on their credit cards, meaning that if the card only allows you to spend 1,000 and the balance is sitting at 900, it's pretty close to being maxed out. So if there's something like that on one of the borrowers, they're going to adjust the whole file and view it as riskier than a different one if the score were higher. So that's really what they do. And they're lending two, three, $400,000 to you. So just kind of get in their shoes and think, if you're going to lend some money to your family member and you know that that family member may or may not pay you back, you're gonna, I won't
I
give
have
you 200.
second thoughts about it.
Yeah, I'm not gonna give you 200, uncle, but I have $20 I'll give you. And if I get it back, great. If not, oh well, at least it's not 200. That's the
Yeah.
way that the banks evaluate. So
Mhm. Pretty much. Yeah. I
yeah.
used to tell the kids that. It's like, don't plan on getting it back. If you have it to give, give it. If you don't, then don't give it
Right.
because there's a good chance you might not get it back. So,
Absolutely. Yeah. Yeah. And I think right now, in this market, maybe you're experiencing some of this too with the buyers in this market. But there's a lot of mixed emotions. Some buyers are just going after it, and they're ready to buy. They're not being at all deterred by the interest rates and where they're currently sitting at. Hitting 7% for the third time in a year is not affecting them at all. And there are some buyers who are just completely out waiting for this crash to come.
oh yeah,
And
I'm
um
gonna
and
wait.
so it's a
I'm gonna
very,
wait.
very
I'm
wide
gonna
range of
wait.
buyers. Yeah, very, very wide range
Well,
of buyers. And I think the overall mindset is what needs to be addressed as far as if you're looking to buy a home, what should you even be looking at, right? Because if you're just looking at one aspect, like the news, you're not going to buy because the news is going to perpetuate quite a story.
negative.
It's
They are so negative out there. It's like,
super negative,
what? And
super
they're
negative.
still waiting for that the market shift. And it's like, what market shift?
Hmm.
Interest rates went up. This is
Yeah,
actually it's not our this is actually a lower interest rate. My first home was like 13, 14%.
right.
This is actually a low interest rate. We unless the world implodes on itself again, I don't think we're probably going to see two and a half too often here.
And to put things into perspective, you don't really want to, because the reason that we had this run up from in 2022, early 2022, we were still sitting at 4.5, and buyers were not liking it. By that was like by April of 2022. By August of 2022, just a couple months later, we were hitting 7. That run up comes from years of 2 and 3%. So you ultimately don't want that because it's going to rebound. And here we are with affordability just vanished overnight. So you don't
Mhm.
really want that, but you want it when you're buying, but then you don't want it again. Like you know what I mean? It's just
Mhm.
so the main moral of that story is to always, if you're in the market to buy, just get ready and stay ready because you never know what the rates are going to do. You never know what the market's going to do. But if you know that you want to buy a home for your family, build some equity in that home, maybe turn into a rental one day and move on to another. Uh, you
Mhm.
know, let that home appreciate and maybe pay for college for some kids in the future. Whatever it may be, if you know you want to do that, just make sure that you get ready on your own by speaking to professionals like Linda on the real estate on the agent side, me on the lending side. Speak to professionals, put a game plan in place, and just execute and just be ready. If now is not the time for you, then okay, but you should still be getting ready if you want to buy a home.
It might
Um,
take you a year to get ready. We
it
don't know
might,
until we sit down with you and kind of see where you're at, and we get kind of where your story is. It may take us, I've been working with a gentleman over 3 years trying to get
Mhm.
him ready, and we're finally got him ready. And we're getting ready to close on his, and it took him 3 years. Now, it had nothing to do, it was just, there's just things that crop up in your credit report, or maybe your income's not being reported correctly, or I don't know, there's crazy things that come up,
Right.
and sometimes we just need to kind of help guide you through that. So
That's right.
don't think just because you can't have one tomorrow doesn't mean that there's no prep work, because if we don't ever do the prep work, we're never going to get you to the point where we can get you through the loan process. So
Yeah, yeah,
that is step
absolutely.
one.
Yeah, that is 100% step one, and I think getting over that fear for some buyers and just figuring out where they're at is mandatory, because even if you do speak to, meet you meet me and Linda in the office, you bring your documents in, she tells you how buying a home goes, I tell you what goes into being qualified to buy a home goes, we go through the game plan, and I tell you, hey, look, I think based on the rate that you guys are saving at, we'll have the funds we need and the credit score where we need it to be in 6 to 12 months. And if that happens and 6 to 12 months is too long for you, you may tell me, Mark, thank you, but no, I'm selling this car. I'm going to sell this and I'm going to do overtime. And you may crush that 6 to 12 month timeline and say, and come back in 3 months and say, Linda, Mark, I'm ready to go. Let's look at I did this, that, and that. And we might say, whoa, okay. Well, we were wrong. We were going based off of what you had been doing, but you wanted it so bad that you made it happen.
Well, I
Or
think what a lot of them don't understand is you kind of lay it out in the first initial meeting after you kind of see what's going on. You,
yeah,
like you say, if you'd sell this car, right, we could put that income toward, if you'd pay these credit cards off, or maybe well, on your credit report we're showing, I don't know, your social, wrong, or your name wrong, we need to get that fixed.
right,
You kind of lay them out with some of the steps that they need to do in order to get ready. And there again, it goes back into their lap as to when can you take care of this, right? So
right.
if they can get it done faster than the average person, then you might get ready for a home a little bit quicker. But if you don't ever check with Mark on
Exactly.
it, how are you going to know?
How will you know?
So
Exactly. Exactly. Yeah. No, and that's what I'm seeing a lot in this market. Is buyers inquiring, which is great, because they're not letting the rates scare them. They want to see what's my plan? How do I get there? So that I think that's fantastic. Just don't let the overall news and negative sentiment stop you from taking the first step. And I love to see it, and putting that plan in place and seeing just how quickly you guys can execute. I think it's fantastic when you guys actually have keys. We know the work that actually went into it on your end. It's great. It's great for us to see.
hmm definitely. And on the other side of that, there are a lot of them that, hey, it's just a minor fix and we're ready to go by next week. We're out looking at houses, and you know, boom, we're right there. So, and we do have a lot of investors, right? Like you say,
Mhm.
you'll buy one, and then 2 years down the road, they're ready to move up to another
Yeah.
one and rent that one out. And, we can help you with that too. So, I mean, it's just a process on where do you want to go in life and how do you want to grow? So,
Yeah, yeah, 100%. I've had more of those conversations recently, Linda, than that I'm really excited to have those. And by those conversations, I mean the buyers from 5 6 years ago. They're sitting on mortgage payments that are much cheaper than people are getting today. Um, they can rent that current home that they have, that their family is outgrowing, that they're in a school district that they no longer want to be in, whatever it may be. They can rent that home out for eight, $900, $1,000 more than what their mortgage payment is, just because of where the rents have gone and when they bought that home. So
mm-hmm,
when you look at it that way, you're going to make eight, $900 on one, but you're going to pay eight, $900 somewhere else. It's a wash. And what you're doing is you're letting somebody else pay off the property you had, and you're moving to a home that fits your family. So that's one way
mm-hmm,
to look at it, for the families that are willing to take on more risk, Okay, there's no way to avoid that. Taking on more risk, but the payoff is so much greater, especially if you have, let's say, two kids, you're moving to a bigger home. When those homes are paid in full, your kids are going to be 35, 36, 37. That's you leave one house to one kid each. That's way more than I'm sure most people are left with, So
Hmm.
it's just
Definitely.
there's plenty of
Back in the
opportunity.
day, 100 years ago, that's kind of where it was. I mean, the generational wealth, right? It
Yeah,
was all handed down, right? I don't think it's near as prominent in today's society, but
I agree.
I do think in the older times, a little bit way back there, a little bit, it was a lot more generational than it is nowadays.
Yeah, yeah.
But
I
even
think it
if
was
you
a
choose to use it for your retirement, kids, you're on your own.
Yeah, you could do that too. I mean, it's going to be beneficial any way you slice it up. Whether you give it to your kids, you keep it for yourself, you use it to buy more, whatever. Any way you slice it up, as long as you're doing it right, not over leveraging yourself. Speaking to professionals, making sure you're moving the right way.
And
It's
I think you hit
it's
it
gonna be
right there on
beneficial.
the head. Talk to the professionals. Don't talk to Uncle Joe. Don't talk to your dad. He probably hasn't bought a house for 25, 30 years and it's way different now. Talk to Mark. Get the real scoop. Get a hold of me and let's get a hold of Mark. And
Yeah,
let's get out there and see what we can do with you and where you're headed. So,
yeah, yeah. And if investment strategy is something you're looking into, that you have a lot of equity in your current home or anything like that. Uh, the strategies are always changing. 2, 3 years ago, Airbnb was the thing. Now, not too many people are buying Airbnb style, unless it's a for sure location. Something that they know vacancies are going to be low on. It's just not as common as it was during COVID, picking these up and keeping them for Airbnbs. So strategy is kind of shifting. So it always speak to even if Uncle Joe is an investor, maybe bring Uncle Joe into that conversation. But definitely the professionals in the field that are doing these transactions every single day and seeing what kind of shifts we're seeing in the market.
and our market changes every few months. It's
Like
not
that.
like I can tell you the market is not doing today what it was 6 months ago, or it's not even doing what it was 3 months
Right,
ago.
right,
It's
right.
a very different market. It shifts, pretty much every couple 3 weeks, actually,
Hmm.
and some of the strategies that we used during COVID is not the same strategies that we use right now to get these people into their homes and different things. That's what they got to understand is, okay, maybe that was 6 months or a year ago, but this is a very different market that we're in. Let's find out if the market that we're in right now fits what you're doing. So
Yeah,
you
absolutely.
just gotta be open and honest with us.
Yeah.
So
On the seller side too. On the seller side, if you're thinking about
on the
selling,
seller side too.
reach out to Linda, because 6 months ago, what Linda was doing for her clients who were wanting to sell might be different for the clients that are looking to sell now. So even on the selling side, if you're not necessarily a buyer, you're thinking about unloading some property, that then strategies are always changing as well on that end too.
Very true. A year ago, I could barely hit the button before, the first offer was in. We were dealing with 20, 25 offers
Right.
and good offers. I mean, way over list price, and it was a super fast market. It slowed down to where right now, I at least have a chance to get it out on the market. And now we're kind of moving into, we kind of need to do the open houses. It's almost kind of a lazy market. We still have plenty of buyers,
Hmm.
and but they're lasting more like 2 or 3 weeks on the market, and we're still kind of opening them up more for open houses and different things. You didn't hear about an open house for a couple of years there between COVID and that next year. There was no time. I mean, we could barely get them out fast enough.
Right. Right.
So,
Right. Yeah. I think I've done more open houses in the past, as a lender on site,
mhm,
in the past maybe 3 months than I did in the past 2 years, So,
definitely,
um, yeah,
definitely.
it's definitely something that's different, So, and I like them. I enjoy them. I enjoy the face to face. I know COVID kind of put an end to that for a little while, but I enjoy, meeting in the office. I enjoy, being out and doing these open houses and meeting all the buyers or the neighbors. A lot of them will step in and make it a point to say, hey, we're not interested. We're just the neighbors. I'm like, no, great. I got questions. How long have you
Come
been here?
on
What's the neighborhood
in.
like? Yeah. What did the house look like before? Who was, I have questions. It's all fun. I love meeting people in
Tell me
person.
all about it. Tell me about the neighborhood. I'm always interested. What goes on
Yeah.
around this neighborhood, and
Yeah.
what's there to do around here, and where do you kind of hang out? And I just kind of like to find out about the areas and different things when
Absolutely.
I. So you're right. I enjoy that. So,
Yeah. Yeah.
well, do you have anything else you'd like to share? And I can include any flyers or anything that you'd like. So don't think that, and you're welcome to do this again. So don't think this was it. But if
Yeah.
you
Yeah.
have something else you'd like to share, let's throw it out there. Otherwise, give your contact information and we'll maybe do this
Yeah.
again sometime.
Yeah, absolutely, absolutely. So, what I want to share is that it can be overwhelming to even want to take the step to purchase a home and leave the rent space and become responsible for the house. But with some good guidance, reaching out to the professionals, you can eliminate some of that fear. So, if you are a buyer or a seller, fearful of what happens if you sell, fearful of what happens when you become a homeowner, reach out. We will put your guys's, your fears at ease. And you can reach out to me on through phone or email. You can reach me at 559-301-0833 or at mrocha at nexamortgage.com is my email. Website mrochahomeloans.com. So
Perfect. And we'll include
there
all
we
that
go.
down below in the articles and whatnot. So
Perfect.
everybody, you can always get a hold of me and I can put you in touch with Mark also, or vice versa, so
Absolutely.
don't be shy. That's the key. We're not mind readers, so we don't always know to reach out at the exact moment, but we're here for you. Just get a hold of us. Everybody, it was lovely speaking with Mark and very informational. Maybe we'll do it again sometime. Everybody have a great day. My license number is 01997670. Have a great one.